One auto stock hits an all-time high, and the Fed debates the end of its free money forever policy. Investor Beat starts now. Thanks for watching. I'm Chris Hill. All lights were green on Wall Street as both the S&P and the Dow hit new all-time highs. IBM helping to lift the Dow index, shares of Big Blue rising, thanks in part to an analyst upgrade. Joining me in studio today, Jason Moser and Lyons George. The Federal Reserve released the minutes from its most recent meeting. While the Fed agreed to keep the QE program going, some members pushed for an end, possibly as early as this summer. When you look at the market today, Jason, it seems like investors didn't care, but you have to believe that there are some companies just a little bit nervous about this prospect.
I think there would be a lot of companies that are very nervous about this prospect. And really, I think if we look back over the course of the last 6-7 years, this free money forever policy really has, while it's been obviously very, very much an aid to the economy, it's given companies a reason to borrow and invest. They're not really doing so much investing. You know, there are a lot of companies that are taking a defensive posture, even in this free money policy. So if we have to figure, if they start tightening the purse strings and make these interest rates start rising, I can't imagine they'll do anything but become more defensive. So I think for a lot of companies out there that have questionable financials or less than stellar financials, it's going to be a real problem. And you have to look to the real big time market leaders with great competitive positions and awesome financials as being the big winners from something like that.
When you think about industries that maybe are nervous about this prospect, right, what leaps to your mind as an investor?
So, you know, I spent a lot of time looking at technology stocks. You got to think that 90% of Silicon Valley is a little nervous here. You know, companies like Apple, like Google, like Amazon, who've got these really strong balance sheets, just huge cash piles. This is going to be a real boon for them, right? I mean, the cost of doing business is going to go up. All their competitors who certainly aren't sitting on as strong of a balance sheet are going to have a tough time really investing in their business, and that's just going to shore up their moat. You know, it's pretty ironic when you consider guys like Einhorn have been suing Apple for holding on to their money. I mean, if the economic winter comes, that's a Game of Thrones reference for anyone who's watching. That's going to be huge for sort of the giants in the space.
What about the Wall Street banks? How do they fare in the economic winter to come?
Well, I think really rain or shine, there are a couple of banks that are going to stand out here, whether it's Goldman Sachs or JP Morgan. The thing is, they do a lot of things that just no other banks out there can really do. And so with Goldman Sachs, we've seen Buffett has really kind of placed his bets there with them. JP Morgan, another phenomenal operation there. Love him or hate him, Jamie Dimon gets things done. So I think for them, they'll continue to flourish, rain or shine. The other ones, they may have a little bit more trouble gathering some of the capital, but those two big players will be fine.
Great hair, too. We always got to say about Jamie Dimon. Great hair.
Agreed.
All right, let's get to some of the day's movers and shakers. Shares of Carmax hitting an all-time high after fourth quarter profits rose 13%. It always seems like a double-edged sword when the stock hits an all-time high. Do you like it at this price?
It does, and it's a disciplined art to learn how to add to your winners. But really, with Carmax, I think there is an argument made for adding to your winner here. I mean, the unit sales are up 10%. They continue to gain market share, and really, when you look at just the overall headwinds facing the new car industry, with the costs of new cars averaging around $30,000+ in the U.S. and people stringing out these terms for such long periods of time now, I think this just plays right up to Carmax's alley there, and I think that they will continue to win from this. So I think that even at the highs today, it's still worth a look.
PriceSmart up after second quarter profits and revenue came in higher than expected. Long term, this has been a winning stock, Lyons, but the last year or so has been a little rough.
Yeah, the last year has been rough, but really looking forward, I think this quarter is indicative of the story we're going to keep getting. You know, as the economy shores up in Latin America, not so much in the Caribbean right now, I think we can expect PriceSmart to keep performing the way they did. So revenues were up 10%, a little below Wall Street estimates, but profitability at 82 cents a share was way above what the street was expecting. And then more importantly, you got same-store sales up 10%. You got net margins and operating margins up year over year. And they're opening new stores, opening new stores this year, and then buying land for future stores, sort of 2014, 2015. I mean, the idea of sort of translating Costco down south just makes sense, and I think long term, you know, it's a buy and hold stock.
Good news, bad news for Fastenal. First quarter profits for the construction supply company rose 9%, and they raised their dividend, but revenue was light, and again, the last year or so, kind of up and down for this stock.
Yeah, and I think your key word there is revenue, and we saw another competitor in the space, a smaller player, MSC Industrial, with the same problem. revenue is light. And the CEO for MSC Industrial was saying that there's just no demand. It's not even pent up demand. It's just not coming back yet, especially in metalworking, which is about a $12 to $13 billion market opportunity for these guys. So really, these are indicators that it's going to be a long, slow recovery. Now, with that said, Fastenal is a great company, and they have a long history of beating the market. And while it's been trailing the market of the past year, the stock at around 30 times normalized earnings today, I think, is worth a look for long-term investors.
And finally, a good week so far for 3D Systems. Shares up for the third day in a row. The past few months, shares have kind of gotten whacked. Do you think that was an overreaction when you consider long-term how this stock has performed?
You know, it's always tough to say within the 3D printing space because there's so much excitement around it. Sometimes it's good for these companies to get knocked down a bit. I mean, I think long-term, the opportunity for 3D printing across pretty much, every sector in American business is pretty exciting. In the short term, though, and the CEO of X1, which is an industrially focused 3D printer, just went public in February. He sort of brought this to light, but he basically came out and said, the company makes less than $30 million. He said, in 3 years, we're going to make $100 million and have 50% margins. To me, that's representative of the over frothy attitude that might be baked into this industry right now. So it's good for there to be a reality check every once in a while. If your company makes $30 million, maybe it's time just to focus on getting it to $100 million instead of holding press conferences talking about it. But long term, I think 3D Systems, X1 and Stratasys are all up over 7% today. The fluctuations in the short term don't matter as much. What matters is, do you believe in this technology? And if so, who's going to create a moat around it?
All right, that's going to do it for Wednesday. Let's look ahead to the rest of the week. Jason Moser, what's the stock you've got on your radar?
I can't get the hair out of my head now, man. Jamie Dimon, the silver mane, Chris, JP Morgan. They have earnings coming out on Friday. And really, I think this is going to be a great indicator of kind of where things are heading, especially with talk of reeling in the quantitative easing thing. But, JP Morgan trades at a little bit of a premium today at 1.3 times tangible book value over Goldman Sachs. But with that said, the results of the stress test in March were really good for JP Morgan. They got the authorization to buy back $6 billion additional in equity and raise the dividend. So I think those are all good signs that this company's doing a lot of good things, and I expect good things from them on Friday.
Okay. Lyons, what about you?
I'm going to be looking at Facebook. They just released the Facebook Home. It's kind of like a modified Android operating system with even deeper Facebook integration. I'm interested to see A, what the user reviews of that are, and then B, in the long term, how that affects the percentage of time people spend on their phones using Facebook and just the number of daily active users that they can get.
Okay, that's going to do it for us. For Jason Moser and Lyons George, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.